Well, now before discussing profit and loss account, we'll have a small discussion on various expenses of the business. Well, if we talk about all expenses which we incur in the business, we can group these expenses into two categories. The first, the expenses which are related with purchase related expenses. Well, we have termed these expenses as direct expenses, and these expenses we record in trading account. The other group is known as indirect expenses. Well, further indirect expenses can be grouped into administration expenses, selling and distribution expenses, financial expenses, and other expenses and losses. Well, all these indirect expenses are recorded in profit and loss account. Dear students, now we'll understand the next account, profit and loss account. Well, profit and loss account records all indirect revenue expenses and indirect revenue incomes of current year, whether they are paid or not, whether they are received or not. It means it does not record capital expenditure and capital income. Well, students, if the firm has paid any amount against which the firm gets any asset, it is termed as capital expenditure. If the firm has paid any amount against which the firm gets any services, it is termed as revenue expenditure. The net result of profit and loss account is termed as net profit or net loss. Well, now we'll understand the format of profit and loss account. Well, profit and loss account is prepared at the end of the year. So on the top of profit and loss account, we write profit and loss account for the year ended 31st March. Well, the debit side of profit and loss account, first item we record is gross loss transferred from trading account. Then the first indirect expenses, administration expenses like say salary, rent paid, insurance paid, printing and stationery, etc. The next group which we record is selling and distribution expenses like say advertisement, delivery van charges, salesman's commission, etc. The next group is financial expenses like say interest on capital, bank charges, etc. And the last group we record is other expenses and losses like bad debts, depreciation on non-current assets, Diwali gift donation, etc. Well, if we talk about credit side of profit and loss account, the first item we record is gross profit which is transferred from trading account. Then we record all indirect incomes like say interest received, discount received, dividend received. Indirect incomes we don't classify into any groups. We just make list of these indirect incomes. Well, if the credit side, credit total of profit and loss account is higher, that means the amount is on debit side, it is termed as net profit. And if the debit total, debit side of profit and loss account is higher, that means the amount is on credit side, it is termed as net loss. Well, students, now will come to the most important statement which is known as balance sheet. Well, balance sheet is a statement which shows the financial position of the business. It shows various assets and liabilities owned by the firm on a particular day. And that is the reason, guys, on the top of balance sheet, we don't write balance sheet for the year ended. Instead, we write balance sheet as on, as at 31st March. Well, balance sheet has two sides, capital liabilities and asset side. On capital and liability side, the first item we record is capital. We start with opening capital, that is capital at the beginning of the year. With that we add additional capital introduced by the firm, if any. From that we deduct drawings throughout the year. With that we add or subtract net profit or net loss which we have derived in profit and loss account, and we get closing capital, that is capital at the end of the year. The next item, we record all liabilities. In liabilities we first record non-current liabilities. Students, non-current liabilities are those liabilities which are to be repaid over a period of 1 year. So in non-current liabilities we record long-term loans etc. Then after we record all current liabilities. Current liabilities are those liabilities which are to be paid within a period of 12 months. Say like creditors, bank overdraft, outstanding expenses, bills payables, etc. So that completes our capital and liability side. Talking about asset side, the first we record non-current assets. In that, tangible assets like say plant and machinery, land and building, furniture and fixtures. Then after we record intangible assets like goodwill, patents, copyrights, trademarks, etc. Then after we record all investments done by the firm, like say investments in shares of the company, investments in debentures of the company, etc. Then after, on asset side we record current assets, which are those assets which can be realized in cash within a very short duration. Current assets like closing stock, like debtors, like cash, bank balance, etc. The last section on asset side we record is miscellaneous expenses not written off. They are also termed as fictitious assets. Well, those deferred revenue expenditure which are not written off, say advertisement expense not written off, say miscellaneous expenses not written off, all these expenses which are not written off, any accumulated losses which are not written off, they are recorded in this section. So guys, this completes our balance sheet. Well students, the format which we discussed about balance sheet is as per the order of permanency. Means the most permanent asset on asset side is written first and the most permanent liability on liability side is written first, and then after accordingly all other assets and liabilities. So this was the order of permanency. Similarly, balance sheet can be prepared in other format also, which is known as order of liquidity. As per the order of liquidity, all liquid assets and liquid liabilities, that is current assets and current liabilities, are written first, gradually followed by non-current assets and non-current liabilities. Guys, manufacturing companies, trading companies, they prepare their balance sheet as per the order of permanency, whereas financial companies, they prepare their balance sheet as per the order of liquidity. So you can present balance sheet in two different forms. That is known as marshalling of balance sheet, in the order of permanency and in the order of liquidity.